Hey guys, and welcome back to a new accumulation zone trade recap. Let's get straight away started. Today we're going to be recapping the price action during the London kill zone right here on the Australian US dollar, on the British pound US dollar, and on the Euro US dollar. The first entry presented itself today after a consolidation right here on all three charts here on the British pound US dollar. Let me zoom in here again. We are focusing on this first part of the London kill zone right here after 2 a.m. We saw this roughly 40-45 minute consolidation here to the side. Same here on the Euro US dollar chart. If we zoom in here, we also see this consolidation sideways. But on the Australian US dollar, we got the first entry opportunity right here at 2:30 a.m. New York local time. We just got our stochastic RSI crossover on this pin bar candle right here. Now we did not get it right here, but on the next candle right here, a bullish candle below the VWAP, we got our stochastic RSI crossover. So I waited for one more candle and I watched the British pound and the Australian dollar at the same time out of this consolidation. And I saw this bearish close candle right here at 2:30 on the British pound. At the same time, we did not receive our stochastic RSI crossover. If you zoom in here, hang on, let me actually zoom in here. Right at this time, the lines of the stochastic RSI did not cross or didn't cross over yet. So I entered right here already in a short position on the Australian US dollar. I had my stop loss right here at those highs for a 7.5 pip stop loss, with my take profit target sitting at 2-1 for a 15 pip take profit target. And I was pretty sure that this one is going to be hit because we are still inside our Asian range from our Asian kill zone high to our Asian kill zone low right here. My target was not below the kill zone's low, so I was pretty confident that my 2-1 15 pip take profit target is very likely to be hit. Continue going down, we retested the VWAP with a beautiful pin bar right here, and then we had a sharp drop at 2:45. 5 minutes after my Australian US dollar entry right here, based on the stochastic RSI crossover, I got my entry right here on the British pound US dollar. So you see on this candle, we haven't crossed over yet on the stochastic right here, down here. But right here on this candle, we did cross over bearish above the 50 level, which is right here at this line. So I entered, even though it was a doji, I added a little bit of more room to the stop loss. So usually I would have placed my stop loss right here at this swing high for an 8.5 pip stop loss, but because of spread and because I entered on a doji, I added a few more pips, so 1.5 pips on top of the stop loss, because you never know, there could be for example, a very similar wick like this, just higher to the upside right here, maybe retesting the VWAP whatsoever. So just to be safe, I added a little bit more room right here on top of the stop loss, also going for a 2-1 risk reward target, which is equivalent to a 20 pip take profit target, which was also hit right here at 2:45 or by the time of 2:50. So already by the time of 2:50, I locked in 2% profit right here on the Australian US dollar chart, and right here on the British pound US dollar chart here as well. So because I had two winning trades, my daily take profit target was already hit, and I decided to stop trading after that. So right after we got our entry signal on the British pound US dollar chart right here, I switched over to the Euro US dollar chart, and we also got a valid entry right here with a close below the VWAP, a retest of this bearish fair value gap here. Of course, that's not part of our strategy. We got our crossover right here, and this could have also been a valid entry right here on the Euro US dollar, but I did not take it. I felt like it's enough risk to be in two trades at the same time on two US dollar correlated pairs. So I did not take this entry on the Euro US dollar, which would have also played out throughout the day right here on the Euro US dollar chart. You wouldn't have received another entry other than this one right here at 4:10, so towards the end of the London kill zone, which hit a 1-1.5 risk to reward ratio, after which we move our stop loss to break even, which would have been hit right here 5 minutes after the London kill zone is over. Alright, so overall here on the Euro US dollar chart, we would have made a net profit of 2% by taking this single trade right here after the stochastic RSI crossover. On the British pound US dollar, if we would have continued trading through the whole kill zone, we would have actually received 2 losing trades. But what I can say about this is, so first of all, after those first 2 winning trades within the first hour of the London kill zone, I already hit my daily take profit target. So I decided not to continue trading and instead take my dog for a walk, something that I really enjoy doing, instead of trying to force more trades after already making a insane profit goal of 4% for the day. It's not necessary. I've got some rules in place that stop me from over trading, and this is a hour-based rule, so I'm not trading longer than 2 or 3 hours per session. I am not going, if I'm 2% in drawdown, I'm stopping to trade, and if I'm above 3% in profits, I'm also stopping to trade. So my take profit rule was already met, so I decided to stop trading. And if you would have continued trading, what I can say about this movement right here is the divergence between the British pound US dollar and the euro US dollar, also with the Australian US dollar. But by the time right here at 3 AM New York local time, when London opened up, we still, let's say, we continued making a new equal low right here by 3:05, and then by the time of 3:15 we still got wicks to the upside, meaning that there's enough selling pressure in the market. But on the euro US dollar chart, if we check at 3:15 AM, we already made back this whole move to the downside. We actually wicked up above, almost above our pre-Asia high, which is relatively speaking to the pound US dollar pretty far away, pretty far move. And right here it's the same time, 3:15, we were still basically at the low of this candle. If we compare it to the euro US dollar chart, this would be equivalent to this low right here, but we've already been way above it. So taking a short on the British pound US dollar while the euro US dollar is relatively strong, basically is indicating that the DXY, the US dollar index, is relatively weak. Wouldn't have made a lot of sense to me taking this short right here, also because we did not fully pull back all the way to the VWAP. We did it right here and we got another entry opportunity with a very big stop loss. I mean, look at it, this was our previous trade. 20 pip take profit target is most of the time very likely to be hit, but this is just a lot. And we also had news going on for the New York kill zone right here. So now if I zoom out of this chart, we see that this whole London range was basically a big consolidation, working our way up to our New York kill zone non-farm employment change news at 8:15 AM New York local time. And if I'm going over this, we see we consolidated within this green box. Consolidated at 8:15, we received the news, and we had a massive, almost 100 pip drop to the downside. We had the same thing occurring here on the euro US dollar chart. We went sideways, but a little bit higher again into our Asian range right here, almost all the way up to the high. Resistance right around the VWAP. 8:15 news come in right here on this big news candle with a continuation move to the downside to our previous day's low. Same here on the British pound US dollar, and same here on the Australian US dollar, where we actually didn't leave our Asian kill zone high and low range basically. So the whole London kill zone and London session, we stayed within this range up until 8:15, where we had this drop all the way to the downside. Also, let me measure this one out. How many pips was this drop? Let's measure it from 8:15 right here all the way to the low. Come on, let me zoom out here. Let's measure this move. That's a 65 pip drop on the Australian US dollar chart right here. We actually got a bearish crossover right here on this candle, but we don't trade the news. At least I don't. If you like to trade the news, feel free to. It's too volatile for me. I prefer taking my trades with higher probability right here. And yeah, you would have very likely already hit your take profit target. Like mentioned before, here on the euro US dollar chart, you would have netted a 2% net profit. On the British pound US dollar, by taking all the trades during the London kill zone, you would have actually ended up at break even, so one winning trade makes 2% net profit, two losing trades makes minus 2%, so here you broke even basically. And on the Australian US dollar chart, you would have had one winning trade, and right here there was another entry opportunity after this VWAP retest short, which would have also hit your stop loss depending where you placed it. So overall on the Australian US dollar, you would have also made 1% for the day, which is adding up to a total net profit of 3% for the London kill zone on the Australian US dollar, the British pound and the Euro US dollar by taking all the trades. But I can just talk about myself here. After having my daily take profit target hit or my session take profit target hit, I stopped trading because also if I trade for too long, I really notice that I'm losing focus and everything here, because sometimes I catch myself being on my phone, going through a few Twitter posts or something, or maybe switching tabs right here from TradingView to something else. And that's how you can tell that you're losing your focus. And especially for scalping, you have to be at 100% of your focus. You have to be at your peak performance level to be actually able to scalp profitably. You have full concentration. And if that's not there, there's no reason why you should continue trading. Especially as soon as you hit a profit target of it, if it's just a single percent. You know how powerful the daily compounding effect can be by making 1% per day. Why force yourself to continue to trade at least during the London session if you already locked in 2%? There's no need for it. Especially by scalping and risking 1% per trade, you should know that you're not going to reach your financial freedom goals within a single London kill zone. So if you already made profits, lock them in and maybe check back during the New York kill zone. Prepare for a news event like this 100 pip drop to the downside. Stop trading as soon as you secure profits. Of course you can continue and argue, oh, I'm going to reach my goals sooner and sooner and sooner, but you're putting yourself at more risk than actually necessary. Secure your profits, because tomorrow there's always going to be a new trading day, a new London kill zone for you to scalp a few more percentages. And over the long run, with patience and consistency, it will pay off. Maybe not by tomorrow, but over the long run. Alright guys, take care. That's it from me for today's trade recap. I hope you enjoyed watching it. If you did, make sure to give this video a thumbs up and subscribe to our YouTube channel for more trade recaps.